Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock with news, a Chinese bond bubble is a significant threat to regional Chinese banks. But first up in the US, durable goods orders surged 9.9% in July from the prior month, rebounding and more from a 6.9% decline in June and exceeding market expectations of a 5% increase. It was the largest rise since May 2020, mainly driven by a surge in transportation equipment orders. Excluding defence, new orders increased 10.4%. Pre-pandemic, it is the largest single monthly jump since 2010. But a lot of this is just making up for tepid rises in prior months. Year on year, these July orders are up 3%. So yes, it's a good result, but not quite as spectacular as the month-on-month gain suggests. But it is not even either. In Texas, their oil patch reported yet another slip in their factory activity, extending the weakness in the Lone Star factories to 27 straight months. And the Germans are also feeling a pinch in their business sector. Their IFO business climate indicator eased to its lowest level since February, driven by increased pessimism amongst companies for their current situation. In China, worries about a bubble in bond valuations is worrying their central bank. We've been reporting very low Chinese government bond yields for some time. Lower yields boost the price of these safe benchmark bonds, attracting hot money and driving yields lower and the prices higher. Among the investors are big regional banks. The worry is that if this bubble persists, these investors stand to lose so much their bank will fail, a bit like Silicon Valley Bank. And there are conflict of interest problems in their bond markets too. The US Treasury 10-year yield is still at just on 3.81%, and up a minor 1 basis point from yesterday. And the price of gold will start today up $6 from yesterday at $2,518 an ounce. We make that an all-time record high, although it has been slightly higher intraday. And oil prices are up $2 at just under $77 a barrel in the US, while the international Brent price is now just over $80 a barrel. Supply risk is driving today's rises, largely based on domestic security issues in Libya. And the Kiwi dollar starts today down 20 basis points from yesterday at 62.1 US cents. Against the Aussie, we're marginally softer at 91.6 Australian cents. Against the euro, also marginally softer at 55.6 euro cents. That all means our trade-rated index starts today at 69.6 and down 30 basis points. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.